All right, Derek and Gabe here with you. We're in Charleston, South Carolina, both prior veterans. I'm still current reservist, Navy, Coast Guard, a little bit of a riff, but but either way, we're here to support you all that is looking to buy a home through a VA or conventional loan or whatever, but we're here to describe the differences between those loans. And Gabe here is actually a mortgage broker, and we're going to go into some of the benefits and misconceptions that VA loans represent. So the first thing we're going to do is talk about the opportunity that VA loans give you.
Yeah.
You want to talk about some of the misconceptions and pros of the VA loan, just generally?
Yeah, absolutely. So guys, VA loans are amazing. And I know that even most lenders that weren't even in the military space, whether they served or have family that served, are still going to say the same thing. And here's why, right? So big thing, right? The VA is not the lender. I know a lot of people think, well, the VA is a lender. They're putting all these things on there, like when you're the seller, right? VA is not the lender. We are. So they allow people to, or mortgage companies to do loans based on their guidelines that they put out, right? Mm-hmm. But they're also really flexible, which is the first point that I want to make, is that in terms of underwriting, VA loans are by far the easiest, right? There's stuff you can do in VA loans that you can't do with conventional loans, with FHA loans, with USDA loans. So if you have really interesting or unique income situations, maybe the underwriter doesn't agree with me on what the income's going to be, and the debt to income gets pushed a little bit higher, that might be an issue with conventional or FHA, right? But with VA, we've had people, whether or not you should financially or not, we've had people still be approved even if their DTI jumps up 3 or 4 percentage points, right?
And that's a conversation we can have with them too, with you all that are, do you want to take on that loan amount and how to decrease or increase or whatever the your mortgage, monthly mortgage. So that's something we do take into consideration. Right. Something else, the VA loans are very, there's a huge misconception on whether it be the inspection or whether it be only active duty military can apply for them if you're a veteran. And there's a few other stipulations too, even if you're not a veteran, on how that may help. So make sure you talk to one of us if you have any questions or you think you may be eligible for a VA, because I hear a lot, people say, I've already gotten out, I'm not eligible for VA. Well, that's just simply not true. If you've good standing, got out of the military, then you more than likely will be. Most cases, there are stipulations, but most cases you are eligible for that. So that's one big misconception I see a lot. Like, what are another?
Yeah, so going back to what you're talking about with the inspections, right? So in the state of South Carolina specifically, and I know, look, VA, you can go to any state in the U.S., right? Well, let's talk about South Carolina for a second, because that's where we're at, right? Mm-hmm. So the only required inspections that need to be given to the mortgage company are the appraisal and what's called the CL100, which is your moisture and termite report, right?
Mm-hmm.
Those are the only inspections. You don't need to give your traditional, 80 million point inspection to us. I don't want to see it, right? The only things I want to see are the CL100, and I want to see your normal appraisal, right? Mm-hmm. There's no way around that. In terms of the appraisal and misconceptions, right? Any agent that is trying to convince their seller out of accepting a VA loan because of appraisals, this might not blow your mind anymore. I know there's been a lot of videos made about these, but if you haven't heard it, this should blow your mind. So with appraisals, right, the biggest fear that we had during the pandemic, which I know when interest rates were low, everybody wanted to buy during them. They thought it was the best time to buy, right? But how many people were offering $50,000, $60,000 over, right?
Yeah.
There was low appraisals regardless of loans, loan programs left and right? It was the wild, wild west. Let's look at nowadays though, right? Maybe interest rates are a little bit higher, not less buyers on the market. Maybe that's a good reason to accept a VA loan. There's less buyers out there, right? Accept anything. Just kidding. But with the appraisal, what happens if it still does come in low or potentially will come in low? Mm-hmm. Well, with conventional, if you're not going to know whether it comes in low or not. You just get the appraisal report, like, here, you're $20,000 below value, right?
Yeah.
With VA loans, they have to enact what's called Tidewater. So essentially, if the appraiser comes back with their report before handing it in to us, and we know that it's going to be a low appraisal, they will give the lender and the agents 48 hours to submit the comparables to show why they listed the house at that, right? Again, you don't get that with conventional, you don't get that with FHA, you don't get that with the USDA, you get that with VA. You get that for, you get that like heads up that it's essentially coming in low, right? And so it's all, I call it an all hands on deck procedure. Everybody's getting in, improvements made to the home, comparables to why they listed it at that price to basically give to the appraiser to combat that.
Yeah, the VA loan is very safe in a lot of different ways. I have to be careful the way I say that, but it is a very safe product, and there's a lot more pluses and pros than cons with a VA loan, probably more than any other program that I've dealt with out there. Yeah. And it gets a bad rap because of a few bad seeds, but it's a very strong product that if the seller is not accepting a VA or kind of giving you pushback on accepting a VA offer, I think that on a lot of different levels that's not good business. That's my opinion on that. But now let's go into so VAs. There used to be a cap, right, for VAs. Now the cap is kind of the way that they organize that's a little different now, right?
Yep. So prior to 2020, there was absolutely a VA loan cap. Now, since the Blue Water Act of 2019, which went into effect in January of 2020, there is no cap. Look, if you're a high rolling admiral, general, right, or you're just a savvy, enlisted guy like myself that is just sitting on a whole bunch of monthly cash flow, you can go buy as much property as you want, 0% down, no mortgage insurance, right? Mm-hmm. Just because you're going with a VA jumbo, and we're talking about, right, this an initial use of. Well, I shouldn't say initial.
What's a jumbo first? Let's go back and see, what exactly constitutes a jumbo, as far as we're talking about a certain price range, right? So if you're getting a certain price range property, then that elevates the lending standards into a jumbo loan. So it's different.
Jumbos are any loan amount above the conforming loan limit, which, guys, correct me on this or put it in the comments if I mess this number up because there's so many, but I believe it's 726,200. Yeah. Am I right on that? Okay, so let's call it 726,200 for today, right? Any loan amount that's higher than that is considered a jumbo loan. So, back before 2020, if you wanted to go above that, you might have to incur a certain down payment, right? Mm-hmm. Yeah. With VA loans nowadays, not necessarily, right? And I say not necessarily because if this is the only VA loan that you have currently, most likely it's still going to be 0% down, which and I don't want to get too far into the video because I know you want to introduce the topic, but you can stack VA loans. You can absolutely use more than one, right? And that's a more in-depth conversation to have.
You can use 3 or 4, right? You can, but down payment's a little bit different, and how much you have left in your entitlement for VA. Right. So explain that a little bit. What is entitled? What do I mean when I say entitlement to a VA?
And so and to wrap what the previous question was up, you can do jumbo loans, no limits on VA loans, right? Still 0% down, no mortgage insurance, good to go, right? Okay, so going on to stacking VA loans. What that looks like. So, generally speaking, right, most people know about basic entitlement of VA loans. There's also bonus entitlement. It's not really a straightforward calculation. Right. Don't even ask because I don't always know how to explain it well to people. I know there's that rule, if you know how to explain something in 30 seconds, it's really complicated, then you're good to go, right?
It's never always that simple. The government. It's going to be difficult.
Yeah, but you can stack VA loans, right? So, let's say you bought a primary home, you're PCSing, you don't want to refinance that loan because you bought it, in 2020 and your VA loan is 2.5% like me, and you're like, well, I want to go buy another, home utilizing VA benefits.
You do that. And it's still a very small down payment, by the way.
Right. It's not like you're going to have to go necessarily do 5 or 10% down payment, right? it could be like a $3,000 or $4,000 down payment, right? So it could be like 1% of the loan or less. And so, or of the purchase price or less. So we do a VA entitlement worksheet. And so we can see how much entitlement that you have left. And if you wanted to stack your VA loan, how much that would mean in down payment. But generally speaking, it's still a better move than thinking you have to go the conventional route or the FHA route, because the down payment could very well be a lot less than that. So still a great tool. This is not a new thing. I can't tell you how many times I've heard lenders tell their clients that, well, you are now able to stack VA loans. Like, this was a recent change. No, that was just them trying to cover up the fact that they didn't know that you've always been able to stack VA loans.
Right.
So, yeah.
And so with that, like when somebody wants to buy a second or third home, so what about investment properties?
Yeah, so let's first start with like the basic rule of VA loans or any government-backed loan. It is technically for the use of primary homes that you are going to own or occupy. Now, house hacking, that's a real thing.
As long as you're living in it full time, right?
Right. So that's what I mean, right? So you're going to be signing an affidavit with these Govy loans that says you're going to be living in the home for at least 12 months. Now, so how do you house hack it, right? Well, let's just say you want to buy a multi-unit property. So 1 unit, 2 unit, 3 unit, up to 4 unit, standard residential mortgage terms,
or
right?
Home with a frog,
Home with a frog. You can live in one of the units, or you have to live in one of the units, but you can also rent out the other ones, legally speaking, right?
We have accessory dwelling units here in Charlotte, pretty much, they're everywhere, but they're all ADUs. And so there's a lot of new home builds that are building these accessory dwelling units, which are basically a little apartment aside on the same property, that a lot of people are using that for rental income or in-law suites or whatnot. So for example, if you're moving to a new area and you don't want to foot the entire bill for that mortgage, that's a way to house hack it. Have one of your shipmates, buddies, whatever you call them in your service,
Right.
Come on down and rent that extra space out, and it's not even attached to the home a lot of times. Or you can rent out per room, right? You can still rent out room by room as well. So there's a lot of different ways to get into a home through a VA loan and house hack it, make it affordable for you. We all know that in the military you don't always get paid an extraordinarily large sum of money a lot of times, but there are still ways to get into a home that you can afford on the just on your budget. So to wrap things up a little bit, we're going into minute 12, 13 here. So to wrap things up a little bit, what are some of the things that you want people to take away from what we're talking about right now? Yeah, so look, if you're a seller or you're an agent representing a seller that maybe just doesn't know about VA loans, or didn't know enough to be dangerous enough to advocate for them, the biggest things I want you to take away from this are regarding the inspections, right? With appraisals, you don't get that heads up with conventional or FHA or USDA. You do get it with VA. You have to if it's going to come in low, Tidewater gets enacted. Mm-hmm. And then as well, which we didn't really talk about in the video, you actually get one more chance above and beyond that. So if the appraiser is still not budging, but you feel like you have soundproof evidence that it should be at what you listed it at, you can send that information to the VA Regional Loan Center. They can take a look at it, do that reconsideration, and sometimes supersede the appraisal. Which I know we both have familiarity and experience with. Yep. So. And as well, in terms of the appraisal, what are they looking for? They're looking just for the fact that the home is safe, sound, and sanitary, right? And nothing crazy. Like, I've seen more conventional loans come in under value than I've seen, VA. The other thing too is that I've heard, we didn't talk about this in the video, but I know we're trying to wrap things up, is that I've heard people agents tout that VA loans are for veteran buyers or active buyers that have terrible credit, right? That's not the case. The VA doesn't denote a minimum credit score. I have plenty of active duty and veteran borrowers that have scores in the 700s and way above. And actually, statistically speaking, there's less default and foreclosures on homes with VA loans than there are with any other loan program, right? FHA loans are actually specifically made for people with less than stellar credit. That's not the case with VA loans, right? And so really, if I just
want people to understand that the appraisal process and the inspection process, though they are looking for specific things, it's not really any more in depth than a conventional loan, right? As well, you have more seller protection technically because they're not coming out of pocket for a down payment. Let's just say the appraisal does come in low. They can use, a lot of my VA borrowers will just say, well, shoot, to not lose a home, I'll just cover that low appraisal, with my, what I would have put as a down payment, which I don't have to do, right? And then also there's plenty of borrowers out there with stellar credit scores. And I'm going to tug at the heartstrings a little bit, but guys, these are people that have served our communities. Like they've served overseas. They've sacrificed their time. Some spouses that qualify for VA loans their family members who were serving ultimately, made a sacrifice with their life, right? And so don't turn them away just because of misconceptions, right? If you're ever curious, ask one of us. And I want you guys to really look hard at any person that's submitting an offer with a VA loan. They're incredible. They have super easy underwriting regulations, right? So where, other loan programs don't, VA loans are super easy on the underwriting. And they're just good loans to really, they have a higher chance of closing.
So I think the moral is if you have any questions, no matter where you are, really. I know you lend in a couple different states.
Yep.
I mainly work here. I do work here in Charleston, South Carolina, but I can help out all of South Carolina. Or if you're looking for somebody to refer, we can also help out with that.
Yeah, absolutely.
We don't want anyone to go away and not get the proper treatment. So if you have any questions, feel free. The link's going to be below in the comments or around here somewhere, depending on whatever site you're on. So go ahead and look out for that, and we'll be in touch. And hopefully we'll get to hear from you guys soon. And happy travels.